guys? Welcome back to another options video. Let's talk about 3 different stocks, 3 different options I recommend, especially for the upcoming weeks and maybe even the upcoming months. So let's just dive right into it. The first stock that we will be talking about is NIO. And the reason why I picked this is because NIO actually has a floor value of $35, making it pretty perfect for Iron Condor. Now, NIO has a lot of positive catalysts in the horizon, but I think there's a massive cool off for electric vehicle stocks. And right now, NIO is at $37. It's already dropped down to almost $35, the floor value, meaning that opening up an Iron Condor for NIO really isn't that bad, considering that the average volume for the stock is over 100 million. Meaning that the fill for the Iron Condor is pretty high. So right now, NIO is down 5% on April 7th, but we could definitely play the Iron Condor and rake in some pretty sweet premiums. Now, keep in mind that since NIO is a pretty volatile stock and only recently NIO hasn't really moved that much, playing an Iron Condor is a little bit risky, but this is why we don't put all of our money in. I only recommend maybe 10% max on this NIO Iron Condor. Now, NIO Iron Condors are pretty decently risky, but it's okay if the stock is hitting the floor value and just stabilizing. I feel like with Iron Condors, you shouldn't really be expecting max gain. What I really recommend is perhaps after 60 or 70% gains, just close it and just wait on the sidelines. I feel like that's the best. If you guys feel uncomfortable, remember, grabbing profits is probably the best thing. So let's sell a put right now. I don't really think it could go below $36. I feel like that's pretty realistic. Obviously, Iron Condors for NIO, it's a little bit risky since NIO, if any bad news, any good news, could swing the stock massively. Let's sell a put right there, and we buy a put right underneath that, and let's sell a call right above everything else. I don't really think NIO could go above $40. That seems like a pretty perfect stock price. So let's sell a call right there, and then we buy a call right above our sell call. We're gonna continue the order, click 1. Let's just make it 30. That way it's a lot easier. Review the order, and here it is. We have to put in a collateral of $50, and we get a minimum credit of $30 right away. Essentially, if you win this Iron Condor, your max gains for the next week and a half will be roughly 60%, which is honestly pretty good considering that our need is NIO just moving up and down around these 2 price ranges, and you should be able to win. And the collateral is the amount of money that we will be locking in. If the trade goes against you, you will lose your $50 of collateral, but here's a good part. You get to keep a minimum credit of $30, which is a net loss of 20. You're essentially only risking $20, but you could actually turn that $20 into $50 if you're, wanting that. So right now, here are the obligations to actually win this trade. Expiration day and time. I highly recommend people to close a spread before 4 p.m. April 16th, because if you don't, you run the risk of assignment, and that's pretty dangerous. Spreads are some of the most craziest and dangerous options on the market, but that's only if you let them expire through. So we will be closing this Iron Condor around 3:55 p.m. April 16th, or anytime you want if you're noticing profits. So here's how it goes. NIO stock is at $37 and $38. As long as it stays below $40, we're okay. And every penny above $40 will be a full dollar knocked off your collateral. And if it's above $40.50 our buy call, you lose all of your collateral. Now, this is the exact same thing with our put credit spread leg. If NIO stock stays above $36, we're absolutely fine. If it starts dipping below 36, and every penny below 36 will be a dollar knocked off our collateral, and afterwards, if it's below our buy put $35.50, you lose all of your collateral. And that's how it goes. You just want NIO to go up and down around this region, which, if you ask me, NIO seems to have a pretty decent track record at around this location. Now, if you see NIO dip to, let's say, $34 and rebound all the way up to $39, you're still winning the spread. It only matters around 3:55 p.m. April 16th if it's in between those 2 prices. If it is, you should be seeing a lot of gains coming in. Remember, Iron Condors are pretty complex strategies. They're pretty dangerous, so only play them passively, especially with meme stocks like NIO. And the second stock we will be talking about is going to be Chewy. This is an online e-commerce business for dog and cat supplies, health-related products. I guess there's also like reptiles, horses, fish. I guess they added a lot of new stuff to it. There's food treats. It's essentially anything for pets. It's like PetSmart but online, but even more prestigious. Chewy is pretty big, and Chewy recently did hit $118 before collapsing back down to 81. The massive floor value for Chewy is going to be $77. It almost never drops below $77. Right now it's 81. I feel like the world of e-commerce is going to be growing, so you got this consolidation of price. When we see consolidation in price for the past month, that means we could be seeing a massive breakout for the stock. Maybe some decent earnings or news about Chewy should be sending the stock up, since right now investors, the moment it hits $77, everyone starts buying it, and it goes back down to the 70s, it goes back up, goes down to 70s, and goes back up. This is why we will be doing some long calls for Chewy, because I'm pretty long-term bullish on this company. Don't recommend weeklies or even a 1 month option, because you saw it. The stock just goes up and down all the time. You'll essentially be absolutely screwed over by the time decay. You could also make a put credit spread if you want, but the fill is extremely hard. This is why we're going for a regular call. I really recommend July 16th. I feel like it's a pretty decent one, and I highly recommend the $90 call or the $95 call. And that's it. Just check out Chewy. I feel like long term it should be going up, especially once again, you got the consolidation of price. I feel like the stock may be breaking out any second here. You got some volatility around early March, and now the price isn't really moving that much, meaning most investors are buying Chewy and they're holding on to it, and we should be seeing a massive breakout for the stock. And last stock that we will be talking about is going to be Chegg. Chegg actually shows some pretty incredible technical analysis here. You got the upside down Batman ears right here. You got a massive pointing down, you got a massive surge, and you got another massive sharp pointing edge going down and then going back up again. I feel like Chegg is a pretty good stock, especially how it did hit $112 before this massive plummet. I feel like a reasonable price target for Chegg is probably $100, especially with school restarting. You got summer school and stuff like that. I mean, the pandemic isn't over just yet, and a lot of people are using Chegg. In fact, more and more students are using Chegg, and the grade levels that are using Chegg are going down. Like, you initially got high school people using it, and now you got like even some middle school people using it, and obviously almost all the college students are using Chegg, and it's a really, really good stock. And I highly recommend some options, but not monthlies. I really recommend something for October 15th, especially how the fall semester will be opening up. If you think about it, during the pandemic, a lot of the universities were on Zoom, hence the name Zoom University. And a lot of individuals are just waiting for a gap year, and they're not really going to college around this region. And this is why Chegg is a pretty good buy, because of fall semester. And my university, we will be having classes in the classrooms. It's not going to be on Zoom anymore. So a lot more students are now going back to school, re-registering everything, and they feel like, you know, not being on Zoom, it's a much better bang for the buck, which I fully agree. So you got more students entering college, and a lot of these students are in the STEM majors. STEM is extremely popular, and we should be seeing more and more individuals getting Chegg, and this is why I highly recommend some options. The $100 option is pretty good, especially how the implied volatility is super low at 46%. It's actually pretty decent, with the bid and ask price very close together, with the average of $7.70, which is $770. So I highly recommend the $100 Chegg strike price. You guys may be wondering, why do I always drag out the expiration? And the reason why is Chegg is going to be needing a lot more time to recover. You clearly see the graph. It doesn't really go up that much, and it also goes down. If you have weeklies or monthlies, you'll be absolutely screwed. This is why you should drag out Chegg to October, and that way, if it has a slow and steady crawl all the way back to its original price tag of $113, which it may, you should be making a lot of money. Now, I like the Chewy play a lot better, especially how the technical analysis looks way better. You got this massive consolidation of price. The stock is slowly stabilizing, and Chewy could be breaking out any moment. Look at the past year. It's completely flat, with volatility decreasing as the days goes on. So we could be seeing a massive breakout for Chewy, maybe back up to $100, which should be a massive gain for your long-term options. And NEO is the dangerous guy in the group. It's a pretty risky stock, but there's not really that many new catalysts for NEO. And make sure, do not play NEO on earnings. It's pretty volatile and it's pretty dangerous. That's about it, guys. Definitely check out BlockFi, link in the description. Click on it, make a BlockFi account, deposit some money, and get up to $250 with a Bitcoin with BlockFi. It's an amazing crypto trading app. Thanks for watching.